October 18th. All right, it is the week we've all been waiting for months. Is the September rate increase still on the table? That is the big question this week as the Fed contemplates raising interest rates for the first time since 2006 at a policy meeting on Wednesday and Thursday of this week. According to the Wall Street Journal's chief economic correspondent, though, John Hilsenrath, the Fed might want to wait. In his latest piece out this morning in the Journal, lesson for the Fed, higher interest rates have not been sticking. Hilsenrath says global central banks that raised rates recently have had to backtrack and start cutting rates after raising them. Joining the conversation is JPMorgan Fund's global market strategist, Gabriela Santos. Gabriela, good to see you. Thanks so much for joining us. So you think they should raise rates?
Our opinion is that purely based on domestic fundamentals, we've more than met the criteria to start raising rates. What they said at the last meeting was that they were looking to see some further improvement in labor market data, in inflation expectations, and we think we've more than met that criteria. We've broken through their estimate for the end of the year for the unemployment, now at 5.1%. Last week, we got the highest on record number for job openings at 5.8 million. So we really think we're making some solid progress in the labor market, and the health of the economy is looking quite good.
We may be making progress, but can we continue to make progress when all of the U.S.'s or many of the U.S.'s trading partners are challenged? Japan, recession. Canada, recession. Australia, close to recession. Europe, weak. How much of a factor is this international story, Mike, going to be for the Fed on Wednesday and Thursday?
I think it's a big part of the story. One of the key factors of the market movements over the past year has been this dollar strengthening. And that's because 60% of the global economy is the U.S., Europe, Japan, and China, right? Those three other economies are moving towards easing, or in China's case, devaluation, while we want to get on this tightening path, and that's created that stronger dollar. But the good thing is that, this is not atypical. Historically, what happens here is the U.S. consumer starts spending, and we re-liquefy those other economies, and it becomes a better global story. Again, it's not a great story for U.S. stocks and U.S. Multinational earnings, because that strong dollar is a headwind to them, but it's a good story for the global economy. So I agree with everything Gabriela said. 2014 was the best year for non-farm payroll creation since 1999. And, I read a speech, I was reading a speech yesterday, Janet Yellen talked about the challenges confronting monetary policy in 2013, talking about how the Fed in normal times would raise rates and be tightening before the unemployment rate hit 6.5%. And we're on the cusp of breaking below 5%.
But you got to also look at other data. You got to look at factory orders down for 9 straight months. You got to look at the commodities complex breaking down, indicating there is something wrong with the industrial side of this economy.
Well, I think Hilsenrath is really onto a key point here where he says that these other countries have raised and then had to backtrack. And for all the criticism that the Fed gets, what other country has done it better coming out of the financial crisis? I cannot name one. We've certainly talked about mistakes made in China. Europe has had its troubles. So I think the Fed does not want to look like the gang that can't shoot straight. They're going to say, look, you may not like what we've done, but we're going to stick to our record. And that's why they may hold off this week.
That's why they may hold off.
Yeah, they may, because they don't want to backtrack. They'd rather be a little bit late.
Yeah.
And they can justify being late given what you just cited, right. Maria, and given the lack of inflation.
It's basically deciding whether or not it's worth it to wait another couple of months or a few months, or just do it now and risk it.
I think what they need to wait is what they need to think about is what additional information would they get in a couple of months. Yeah. We don't expect China to stabilize in a couple of months from now. And at that point, you may be behind the curve. So it may be better to get going and then do it at a very slow pace, which is what we expect.
By the way, tomorrow we have one of the last pieces of data coming out that the Fed will consider, and that is the August retail sales number. Talk about consumer spending.
Just at Jackson Hole, Stanley Fischer basically said it's going to be down to volatility in the financial markets. So I think the Fed sees the burden of proof is to tighten here going to this meeting. The question is, will volatility in financial markets come down? And the thing is, it shouldn't be a matter of, we can only raise rates if we're at all-time highs.
Right. Well, you're watching things on the trading desk. Do you think volatility is going to slow down?
I think we'll come off a little bit here, but I think we're seeing a different market cycle here, that the S&P 500 has probably peaked.
All right, Gabriela, real quick, are you telling investors to put money to work in stocks in the middle of all of this?
We are, absolutely. In terms of volatility, what we're telling our clients is really we're just returning to normal levels of volatility. This is what we expect to be the norm for the medium to long term going forward.
So you want to be invested in equities?
Exactly.
You too, Mike?
I'm bearish.
You're bearish. You're on the other side of that trade.
Yeah, I've been bearish for a while.
So you want to wait until you see a rally and then just sell into it?
I would be selling rallies. I think when markets turn, especially when you've been at policy this easy, the Fed doesn't have much they can do here. So that's the risk they're going to run going to this meeting. If they don't, if they choose to stand pat and not hike and the markets reject that, then what are they going to do?
So you're negative on stocks. All right, thank you. We will keep following this. Gabriela, good to have you on the show today.
Thank you so much.
Thank you so much.
Maria.
Please come back soon. Gabriela Santos there. Good.